You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is Thursday. It is noon Central, 1 p.m. Eastern. Do you know where the VIX is? Let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine program, the Option Block, and this fine network upon which you're listening to this fine program right now. If you agree with me, if you like what you're hearing, make sure you head on over to your platform of choice, leave a nice review, so other folks can continue to discover this content in these trying times. And oh, they are pretty crazy. Listeners are going to break it all down for you. And, of course, if you have questions or comments, a lot of you do, send those in as well. We do love to hear from you folks out there. And joining me on the old program today, let's see who we've got on the old all-star panel. First off, joining us back once again, it's been a little while. He is the new and improved version, a.k.a. Andrew 2.0, a.k.a. Mr. Andrew Rocco, the Educational Content Strategy Manager. Say that 5 times fast. Over there at TradeStation, Mr. Andrew 2.0, welcome back to the Option Block, sir.
Thank you, sir. I have some good news to report out of Miami. I think I'm finally allowed to get a haircut, so I'm pretty pumped about that.
There you go. Well, you're ahead of me. I've been doing the home trims for a little bit. I'm developing a new skill, let's say, so it's kind of interesting. I've also opted for the nice quarantine-style full Grizzly Adams beard look, so hence why we're not doing video. All the people keep asking us, why don't you do video? Because I got the full Grizzly Adams going over here. I'll trim it all. I've said I'll trim it all once all the madness is behind us. I may be looking bushy for a little bit. Let's head on over to a man who's always looking bushy, probably. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI, a.k.a. Andrew 1.0, a.k.a. the guy from the pit by way of Carmen Line Capital. Mr. G, welcome back to the program. How goes your quarantine beard, sir?
It's the same. You know, like we have discussed, life for us really hasn't changed a whole lot. So the quarantine beard is okay. And I notice how you threw some umbrage right away. See, after I recorded the shows for you already, the congratulatory shows, then you tossed that Andrew 2.0, 1.0, you try to do like the Bloods versus the Crips thing already on the show, trying to get it going, and we're not even 2 minutes into the show.
Just twisting the knife a little bit. You know, it's my job as the host sometimes. You got to twist that knife as we keep on rolling. Uncle Mike will be joining us forthwith He's busy holding down the client hot seat right now himself, but he'll be joining us in a few minutes. Meanwhile, though, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading. Another weird week on the street here. You know, a lot of mostly upside throughout most of this week, in spite of the fact that the news hasn't been overwhelmingly positive, and yet the market's just loving this rally. You know, it's for most of this week we've seen a lot of upside, a lot of green on the screen. You know, we talked about this before. Meatball and others have broke it down how really once you start parsing it, it's really a handful of big names that are pulling most of the major indices north along with them. It's like the entire world thinks that everyone's going to go get a job at Amazon or Google or Facebook or a handful of other companies, and all the rest of the economic wreckage that is strewn about the country, we can shrug that off. But it seems like today, at least, the recent rallies over the stimulus and, of course, the vaccine optimism, hopefully that is indeed well-placed and not misplaced. Hopefully this vaccine is going to deliver the way everyone hopes. But it seems like that is waning a bit in light of yet more pessimistic, shall we say, economic numbers. Jobless claims coming in today. 2.4 million people applying for unemployment last week. That's using the old school method. I guess they have a newfangled way of doing it. And if you add in that newfangled way of applying, because there were a lot of very infamous breakdowns with the system over the last few weeks, then that adds another million or so applicants. So it's actually more along the lines of close to 3.5 million. Out there. Economists had been expecting about 2.35 million. So they were low no matter how you cut it out there. And we've seen, in the 7 weeks since the peak, we've seen about 6.9 or so million new claims since late March out there. So, yeah, certainly I guess you could say that that was the peak. Excuse me. The peak was 6.9 million back in March. So I guess if you want to look at a glass half full perspective, which I know the Rock Lobster doesn't, but if you want to look glass half full, you can say, hey, it's down from that, right? It's not 7 million people applying for unemployment. So that's the glass half full outlook. The market not taking that, though. Most of the major indices off about 0.5% or so. The S&P off about 0.5%. NASDAQ closing in on 0.6%. And the Dow's a bit of a laggard to the downside, only off about 0.25%. Gold taking a break. Crude, as in WTI, north of the 30 handle again, about 33.5. If you want more crude breakdown, stay tuned in a little bit, listeners. TWIFO 200. The big TWIFO 200th episode spectacular is coming up in a little bit. If you like those, listeners, this is a historic week on the network because following hot on its heels tomorrow, we got VolViews 400. It's crazy. Huge spectaculars coming today and tomorrow. A lot of fun. Special guest cameos going to be on those shows. A lot of you guys chiming in with your questions and comments. All the fun you come to expect from our mega spectaculars. Probably some voices maybe you haven't heard from in a while on the network popping in on some of these shows. So that should be fun. Look forward to that. As TWIFO coming up a little bit later today and VolViews, of course, tomorrow. But now let's go back around the horn. Let's continue the way we started. Let's go back to, actually, I didn't even break down the big numbers yet. So let's get to that first. VIX coming into showtime, hovering a wee bit north of the 29 handle, about 29.1 or so. That puts it effectively unched from where it was this time last show. It was up about half a handle, 3/4 of a handle, a little bit before showtime, but it kind of gave most of that back. The VVIX is down slightly, still around a little bit north of that 120 level. Everyone watches that barometer. It's at about 123.5 coming into the showtime. And our old friend VXX was at about 34.9, so threatening that 35 handle coming into the show. That puts it up not even 1/4 point from where it was this time last year. All right, a lot of table setting has been done. Let's go back around the horn. Let's start with the new and improved Mr. Andrew 2.0. Sir, while you're busy planning your next haircut, what have the TradeStation legions, what have they been trading up over there, sir?
Yeah, so our most active names currently are SPY, Amazon, Facebook, Apple, Tesla, Boeing, AMD, Netflix, and IWM. So I would say the most surprising to me is that IWM has moved up onto the list. Of course, we've talked about it. It's been moving like crazy recently, but this is not usually one that we see for our client list of most actives. Another one, Boeing, not surprising at all. They saw an upgrade from RBC this morning, popping its head back above that 50-day moving average, and that one's been among the most active for a while. And then AMD remains the sole chip name. Kind of has held well considering all of the news out of China. I think we saw some headlines this morning coming out of Beijing that tension is kind of ratcheting up between the U.S. and China. So we'll see if that one can continue to show that relative strength.
We shall see indeed. Now let's see what the rockingest of lobsters has on his radar, a.k.a. Mr. 1.0, the original, the OG, Andrew OG. Mr. Rock Lobster, sir, what is lighting up your tape and indeed the tapes of your crazies over there in the land of the Pit Chat, sir?
Pit Chat today has been a little quieter. There was a little bit of earnings froth for us. Our patented SSS earnings type trades, which we do in our pro chat room, which worked out pretty good. So not a bad week for those type of positions. But really what I am most, because mostly I spend my time in vol land, and how after that initial drop at the beginning of the week, how VXX just hasn't done much. Vol has not done much. We're in that kind of, when you get into contango, even when you're in this high contango, you get, VXX tends to move slower. It's because it's harder to get the futures to move once there's some premium built into them. They do absorb a lot of the cash movement, and there's a lot less action. So it seems almost counterintuitive, but with VIX still at zone 4, although we're getting close to the bottom, VXX is moving less, and it makes it a lot less interesting to trade. I've got some puts that I'm about ready to jettison because we had almost some action and then lack of performance. So as time runs out, my patience with them goes away quite quickly, and then I look for the next thing. So like weird, sort of funky currents, like. Everything is sort of fairly priced here at this level, like 27, 28 VIX feels fairish. We continue to have these huge moves. Market, it doesn't quite know what to do, really, I think. I think it feels like a lot of algo type, bidding. It's because there's been some positive vaccine news. And it almost feels like a kind of a buy the rumor, sell the news type of event. Even if we do get a good vaccine, because I think that solves a problem for sure. I don't know what that day will look like if, there's some sort of consensus, like we go up, 100 points in the SPX maybe in one day, just moonshot. And then everybody realizes, we still have this economic damage because we're trying to put everything back together. So I think a lot of that, a little birdie is telling me about just order flow, a lot of underlying high that usually people are trying to backspread, looking for bigger moves. So I think that's kind of where we are. And the market's sort of like waiting to do something at this point is what I feel like. And which makes actually the vol products not do very much. So I'm trying to reduce. I don't have much left in there, but I want to reduce probably more either today or tomorrow.
And speaking of waiting to do stuff, I'm just curious. I know we've taken polls from our audience, and we'll get to that in a little bit. So I have a general sense of, I think, the way our audience is feeling about these current rallies and the state of vol and everything else. I'm curious, what about the crazies in your pit chat? They're kind of like on the bleeding edge of vol and trading. Are they buying these levels here just from an overall valuation perspective? Are they feeling this rally? Are they starting to maybe fade and get a little spooked?
Most of my pit chat people have not been aggressively short that at all, actually, this whole trip back up. They've been more strategic, like, okay, we have a rally, and then look for put flies and stuff like that in the indexes to kind of ride the little trips back down. But there's been actually a little aggressively short. We just, if the Fed is going to spend $10 trillion or whatever to do whatever they're doing and kind of prop, credit markets up and stuff, you don't really, history is not kind to standing in the way of that. Maybe at one time it will be, but recent history definitely is not. So I just tell most people, things were going okay prior to this virus. And it is certainly possible that things will, be okay again, a year and a half from now, once we kind of pick up the pieces and figure it out. So from a vol point of view, nobody's really been fading the market at all, to be honest. market's actually been more active selling out of the money puts and like 1x2 put spreads and stuff like that. So, but like I said, like 4, 5, 6, 7 weeks ago, when everybody laughed at me, you could pick a stupid price and sell them, and it actually hasn't been a terrible strategy. So nothing has changed from that point, but none of the pitch chat people have been kind of aggressively like, this is way too high. Doesn't mean we can't be down 7 or 9%, in a week or something on just whatever news. But if anything like this China stuff starts to roil the market again, that actually looks like a bigger risk than just about anything else at this point. So I think that's where we are. Just it feels like kind of like 30 ball is sort of fairish, and that's where we're stuck at. So pit chat people are not really fading it actively one way or another.
It's interesting, that's the old adage, right? The market can remain irrational longer than you can remain solvent. So getting in the way of things like the Fed and other things, you're right. And certainly down the road, on the other side of this, whenever that is, with the vaccine and everything else, that's a time to, if you haven't done so already, to just buy in with both feet, it seems like, because if a global pandemic can't derail this freaking bull, what the hell can? It did ever so briefly. It put the bull back in its pen for a little bit. All he did was feed up on some oats and then come out even more energized afterwards. So if this is indeed the beginning of the upswing, and of course we still have a lot to unpack on that front there, but still it does make you wonder, what the hell? The trade war couldn't really do it. Global pandemic couldn't really derail this bull. There's a lot of madness out front. Whenever there's times of madness out there, I like to turn to my old friend, the confidant, the stalwart, the optimistic rock of this fine program, a.k.a. Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir, what is lighting up your tape on this somewhat mixed to down day here to wrap up the week, at least on the old OB, sir?
On the old OB, well, thank you for having me. Just kind of sorry for my tardiness. But yeah, I think that with what we have, the thing that we are pitted up against right now in the S&P is the 200-day moving average, as well as the 3,000 mark. So not that I know I'm considered the resident technician among us just because everyone else refuses to have such a title. But with that, in looking at a chart of this, we do have the 200-day moving average and the 3,000 level pretty close to each other at this point in time. So I think that that's going to be a big barrier for the S&P. You have not only a big indicator as such, but you also have the key number, or a big milestone-esque number within the S&P 500. So combine those two things, and there's some resistance right there that this market needs to go through. So I think that's going to be a big step for the market in getting through that. The other thing that I think really is on my mind a lot lately is what's actually making this market strong right now. Is it the financials? Oh, good gosh, no. Is it energy? Oh, definitely not, although it has rallied recently. But ultimately, technology is getting bigger and bigger. The Facebooks, the Apples, the Netflixes, and companies like that are taking up more and more spots, or more and more space within the index, and that's ultimately what's driving this up. Now, can that hold up the markets forever? No. But is this what's really been holding it up, along with the trillions of dollars of money the government's been throwing in? Of course. So when looking at this marketplace, what parts of the market are going higher? Well, I think a lot of that is technology, and that's something with which we need to keep an eye on as we're doing this. So ultimately, I think that we are going to come out of this at some point, but in order for me to make my trademark statement again this year, which I am desperately hoping I get to make at some point, we got to get through 3,000, and the road to prosperity in this market for the bulls goes through 3,000. We always have to remember that.
You do indeed. You have to remember what else is trading here on the day out here. Let's break it down, see what's coming across our tickers here as we're coming to the close, at least of the trading block section here, in a pretty light day. All things notwithstanding out there, really half a point to the downside. Doesn't seem like it's really budging. A lot of volume. We got VIX at an anemic 59,000 contracts as of a few minutes ago. I mean, the ADV is already pretty light. It has ticked up a little bit. It was 330,000 last week. Now it's up to 358,000. So it's ticked up a wee bit, but 59,000 on the tape today, that ain't going to budge the needle too much out there. SPY at about a little north of 2.5 million contracts. The ADV little bit shy of 5 right now, about 4.71. Doesn't seem like SPY is going to make it. It might if we see a little bit of an uptick towards the second portion of the latter portion of the day. We might be on track for a little bit north of that ADV. We shall see. But S at about 437,000. The travails of the S have been well documented of late. We'll see when all that reopens over there on Cboe land if that budges it, because the ADV right now is 1.05 million contracts. If you watch the S, you know that's not exactly a ton of paper. A lot of the reasons we've already discussed many times here on this network over the past month and change. The Q's at 478,000, ADV 789, and the IWM, which Mr. Andrew 2.0 said the folks at TradeStation trading up over there. We'll be talking to the folks at Russell in a little bit on TWIFO, so we'll be interested in that nugget, I'm sure. The IWM at 278,000 contracts, ADV right now, a pretty aggressive 693,000. If you've been paying attention to small caps of late, and you should be, because they've been leading the dance pretty much every week to the upside and to the downside out here. So a lot of craziness to be found. Let's look at the individual name most active and see if any craziness is to be found. Looks like this is pretty much our usual suspects here in the top 10. And the paper actually is pretty robust out here too, which is kind of surprising given the fact that the indices are so anemic today. It cost you exactly 150,000 contracts to break into the top 10. So that's actually a fair amount. And that gets you all the way to 4. Number 9 is Netflix, $1.52. Number 8, Bank of America, a rare appearance in the top 10, separate from its Boeing counterpart there, who is much higher on the list today. A Bank of America at 163,000. Number 7, Amazon, $1.86 on the tape. Number 6, AMD, $1.98. Number 5 is where we cross the 200K threshold to get to BABA at 213,000. Number 4, Tesla, all the way down number 4. What's going on? 269,000 contracts. The fruit company at number 3. Those are usually our top 2 all the time. 371,000. Who the heck's lighting it up today? Well, our friends across the street are doing that. Boeing, 379,000 contracts. That means what the heck is number 1? It is Facebook, listeners. Facebook doing just an astounding 626,000 contracts out there today. The stock's up about 3 1/3 or about 1.5%. So feeling a little bit of the lift out there today, and that clearly is hitting an all-time high out there today. Well, they have an online shopping feature that they just launched. Surprised it took Facebook that long to get into the online shopping game out there. But that apparently is what is lifting Facebook. We all know the market right now just loving the tech names. Not exactly loving everything else. Amazon down about the same amount, about 1.7% on that news today. So Facebook up about 1.5%, Amazon down about 1.5% on this news. So maybe a little bit of a rival in that space. It's going to be hard, obviously, to unseat Amazon, but we shall see. For all of you Amazon haters out there, maybe that's a little bit of a ray of sunshine for you out there. Let's look really quickly on the earnings front. It was another hot week. We had a lot of retailers this week. We had Home Depot and Kohl's and Walmart on Tuesday. We had Target and Lowe's on Wednesday. Macy's, Best Buy, TJX, NVIDIA, Intuit, HP on Thursday. And today, before the bell, we had Foot Locker and John Deere, if you're into the tractors and the farm equipment, and Alibaba as well. Name us in our top 10. We got some more earnings move results reports here. I'll just break down a couple for you really quickly. You can check out all of them for yourself at theoptionsinsider.com. As always, Take-Two popped off yesterday. They, of course, the video game publisher out there. They closed going into this report. Actually, they closed going into their announcement at 135 and about a half. They were pricing in 6.6% from a vol perspective. They delivered 7.8%. So outperforming, which is a bit of a rarity this season, which is kind of interesting. A few other names on here, but I want to get on to the earnings season report as well. This one you should check out because it kind of shows you in a nutshell exactly how each week has performed in aggregate. It looks like they parsed a total of 817 different names over the course of this entire season. And it has been pretty much a tale of mostly underperformance, with the exception of a couple of weeks. Week 1, the actual moves versus the implied moves, what they were pricing in, it was 87%. So they underperformed week 1. Week 2 was a paltry 59%. So dramatically underperforming there. Week 3, 86%. Week 4 was actually 100%. They came in exactly in line. That's bizarre. I don't think I've ever seen that before. Week 5 is about 124%, so now we're starting to outperform a little bit. And so far, at least, week 6 here, with about 81 firms left to go, has underperformed by, it's only 43%. Again, not all the names are in, but still. Interesting stuff out here. Check it out for yourselves. Earning move result, and indeed the earnings season reports. But now is that time, listeners, to get weird, Now is the time to unleash our Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. Usually it's like when I like to unleash our Eye of Sauron, see what they can find. But while he's out there racing around trying to find himself some unusual activity, I also like to take this opportunity to unleash Andrew 2.0. See what the heck he's finding over there with his hot list and his other tools over there in TradeStation land. Mr. Andrew 2.0, what have you found for us, sir? Regale us with your first name/victim, sir.
Yeah, so the first one is one of the most active names traded by TradeStation clients. You also mentioned it from your data, and that's Boeing. So Boeing saw 542 of the May 29th 145s come in. Also saw 1,000 of next week's 130s. So seeing a bunch of flow in next week's. We've talked about this one a bunch now, but now the price action is really starting to confirm more so. It's regaining that 50-day simple moving average. We'll see how it closes today. Just looking at it intraday here, it's pulling back less than the market is, so showing a little bit of relative strength. It had that shakeout below last month's lows and is now hammering up. And volume today is massive. So has a ton of room higher. It needs to hold these levels and quite possibly some stubborn shorts left in this name as well.
It would be hard to fault them. Maybe it has been a rocky road for our friends there across the street. The pandemic, I haven't had a chance to really go across and sample their wares in their fine cafeteria of late. So I do miss that. They had some good. Every Wednesday they had music and a barbecue outside. It was always fun. But those are yet another unsung victim of our global lockdown here. Another victim out here has been Boeing. That one's pretty well heralded. A lot of it a mess of their own making. A year ago, they were trading 358, almost 359 out there. Coming into today's show, they're at 139.80, up about $6.50 or about nearly 5%. Looks like some analyst love is lifting them today. They bottomed out in the Great Nadir at around $89 actually back in March. So we've seen some rough times for Boeing. They're up a little bit since then, obviously, so looking pretty good. Not quite as high. They, in the initial blush of this quote-unquote V-shaped recovery, they got up to 180.5, so they're nowhere near that right now. They're about 40 handles away from that. So it seems like maybe some saner heads have prevailed given all the other issues. I mean, who's going to be buying planes? That's an issue. Boeing themselves have come out and said they expect at least one major airline to go bust, so maybe the demand for new planes not going to be too explosive out there of late. You mentioned some call paper there. Mr. Andrew 2.0, our Eye of Sauron, also doing a little digging out here into Boeing. Looks like the biggest prints out there today are 1,300, the May 143 calls. Paper dumping those for $5.05 out there. That is not opening, so maybe someone getting the heck out of Dodge and closing those as well. About 1,000 of the May 138 puts also going up below the bid, 1,005 actually. So interesting premium harvesting. There's some upside buying though as well. May 130s expiring on the 29th. So it looks like a weekly cycle here. Going up, paper buying those opening for $9.60, Mr. Rock Lobster. So again, those are pretty much about exactly that much in the money. So it's an interesting choice. Mr. Rock Lobster, what do you think about some of this opening upside call paper in Boeing, sir?
I get the idea of selling into the rally a little bit, but it's one of those things. What's the company worth now, and what's it worth 5 years from now, and who the hell knows? I mean, it was $440, now it's $130. So I think short term, hard to see the stock going up a lot. So I can see why people would write calls against it. So buying calls in this thing is not my favorite thing to do in the short term. I have to admit, especially because vol is so high. How many $10 moves are you going to get in a day and out of Boeing at this point? So I could see riding the calls, just buying them right now into like some analyst upgrade. And I think probably the stock, my favorite thing is just selling the 100 puts. Just do that. You're going to take delivery at some point, but not think too hard. But don't see a whole lot of I don't see like a lot of short-term upside for buying calls, but maybe that's just wearing my grumpy hat today.
Oh, just today you're wearing your grumpy hat? No, the other days it's just your normal hat. Today is a rare exception when you put on the special grumpy hat for it. We're a lucky crew here. All right, Mr. Rock Class, Mr. Andrew 2.0. Well done on the first one. Let's see if you can keep it up. What else do you have in store for us, sir?
So Twitter saw 26,000 of the September 35 calls come in. Like the previous example, Twitter's one that's obviously had a rough time along with the entire market, but now it's trying to bottom specifically on a monthly basis. It just went inside candle and up, so that's something I like to look for. To me, this one is especially interesting because it showed up as the largest new position in David Tepper's 13F. So if you recall, Tepper bought the Carolina Panthers in cash, so he's not someone I generally like to bet against. They've also made a few changes to the platform that were announced this week, so we'll see how that affects Twitter, as well as we have the upcoming election, of course. And my view is it's going to see a ton of traffic and ad spend, especially with less campaigning going on at the moment. So we'll see if that changes, but they do have a few catalysts at this point.
Yes. Okay. A very sizable OI position right now in Twitter land. In fact, if you're looking at what are the number one positions open in Twitter land right now, listeners, there's 46,800 of the Jan 2021 60 calls. So someone feeling a little bit of love there, maybe a little bit of a remnant, maybe a little bit of an overwrite. And then number two, hot on its heels, about 28,000 of these SEP 35 calls. Someone took off a little bit of them over the last day or two, took about 2,000, but roughly that's pretty much far and away. That's the only, out of the top five, that's the only thing that's not in January as well, which is kind of interesting. Now let's look out here. Twitter has had an interesting year. A year ago was trading about $5 north of where it is right now, right around 37.5. It's at about 32.5 right now. It peaked around September of last year, actually, so not right before the big sell-off of this year. It actually peaked in Q3 of last year. September, 44.25. And then it kind of sold off in October. It took a drubbing, went from about $39 all the way down to 30, even pretty much hovered there for a while, then rallied back up to 39 in February. And then we all know what happened in late February into March. Took it on the chin, got down to 22, actually closed around 22 even. Intraday low was 20 even. So even number prints for Twitter, which is kind of interesting. Obviously now has rebounded about 12.5 handles north of that today. Let's just look really quickly and see if we can see any interesting prints out there today. Looks like the biggest prints are about 1,100 of the May 33s out here. So, and nothing, May 35s, no SEP 35s going up today, at least not for size, 1,000 of those. Mr. Rock Lobster, what are your thoughts on piling in to some not that aggressive, about 2.5 points upside calls here in September in Twitter, sir, and doing it for size, about almost 30,000 contracts?
You know what? I have to say I'm kind of a Twitter fan, so I think the stock is hugely undervalued, but it seems like it's another one that at this point, like selling 30 puts, selling the 29 puts, because it can't get off the basement floor, basically. I think it was low 27. But yes, I can totally see that this is a $40 stock again at some point.
I think there's something to be said for that. Of course, we are probably going to be facing a very virtual campaign season this year. And platforms like Twitter, we know the commander-in-chief likes himself a little bit of Twitter. So chances are there's going to be a little bit of Twitter action. And it could be an environment for some actual ad dollars for the first time for Twitter out there. So we shall see out there. We'll keep an eye on these bad boys. All right, Mr. Andrew 2.0, not bad. 2 for 2 so far. Let's see if you can knock it out of the park with your third one, sir. What do you got in store for us?
Okay, so if you are a believer that crude oil has bottomed and we've seen a massive divergence off those lows. We've already had quite a run in crude, but if you are a believer that crude has bottomed and production has come down enough, storage has freed up, ExxonMobil, XOM, saw a sweep of 644 of the June 19 45.50 calls come through. This one is interesting because on a monthly chart, chart, one thing I like to look at is the percent Williams R. This one has a massive double divergence on the monthly chart. It's trying to go inside and up. The inside bar is high range, something that is also a positive. Right now, it is kind of range bound, so you would want to see it kind of take out some levels before getting too aggressive. But it is interesting to point out a little bit of flow. Exxon, of course, is the largest oil company, so they're not going to have some of the fundamental issues likely that some of the smaller names are going to encounter. And it also is testing a massive area of longer-term support going back to 2005. So we'll be watching that one.
We'll be watching indeed, just like Roz from Monsters, Inc. Let's watch what Exxon's been up to over the course of the past year. Today, it's off about $0.75, or about 1.5%. Trading a little bit shy of the 50 handle right now, about 44.64 or so. Obviously, a year ago, it was a wee bit north of that level. It was at about 76.25. So a little north of 30 handles higher than where it is right now. Kind of was at that level for a fair amount of time. Was kind of a sleepy name until all this madness started popping off. At the beginning of the year, started selling off by February. It really started selling off. Let's see, it got down to about 56 by late January, early February, got into 56 range. And then by mid-February, we know what happened. It sold off by the time of the great nadir in March. It was 31.5, got down intraday as low as almost the 30 handle. 30 at 11, so it didn't quite break it, but it got pretty close to breaking that 30 handle. And then, of course, big rebound, right back up to, in a couple of weeks, up to 43 and change, then it's peaked out at about 47.5 before kind of drifting down to where it is right now, 44.60 out there. Some interesting stuff. Calls. I'm looking at what's going up out there today. It looks like a size conversion reversal out there today. 10,000 lots, so pretty sizable. It's like paper selling puts and buying calls, Mr. Rock Lobster. And the July 50 strike doing it 10,000 times, obviously tied to stock. So that's the biggest print out there today. But in general, Mr. Rock Lobster, what are your thoughts? I know you've, in the past, expressed a sentiment about if you want to play crude, maybe it's better to go in some of the individual names rather than like a USO or XLE or those kind of Franken products right now. What are your thoughts on upside these days in Exxon Mobil, sir?
Yeah, this is another tough one. The company is basically, what have they? I know they marked their oil reserves at a very low level. I think this company is trading for like book value or less. It's is there an oil industry in 2 or 3 years? That's the big question. So if you're a long-term investor, again, to me this is more like just sell puts and don't worry about buying calls. But I still think this is it was ridiculous. Like it was almost basically $30. You can have other oil assets for nothing. So one trend that started in January, I think, after that Davos meeting was, all the funds started selling all the oil stocks. It started a long time ago. And it just picked up basically when they couldn't give oil away last month, probably was the low, at least short-term low. So, I think this makes a pretty fair, 5 to 7 year investment. I can't imagine oil demand, I'm sure, will pick up after all this is over. But I think the hardest part is like just long-term where the oil business is. I figure we're going to be using it in 20 years, but they're basically valuing oil assets at nothing. So, so that's, but again, I think it's a put sale business, not necessarily call buying business, but that's my take on a lot of stuff right now.
Yeah, you've never been a big fan of just loading up on the upside premium. We'll see how our friends here work out. Speaking of our friends, let's see what you guys, our other friends, have on the brain. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is the portion of the show where we break down what the heck you guys have on the brain. We'll start answering a question we asked you guys last week. It's still live, I do believe, so you guys can chime in if you haven't done so of late. But we said earlier this week, VIX just broke through 30 to the downside. It was at 29 and change at the time we posted this, and it was about 3 days ago. And we asked you, quite simply, do you think this is marking the end of this recent phase of higher volatility, aka north of 30? Or is this just setting the stage for the next pop in vol? Very simple question. Where will VIX and Spike close 1 month from now? And we gave you 4 choices. So a little bit higher, so north of 35, a little bit lower, south of 25, around here, 25 to 35, or you don't care, you're still in cash. Mr. Andrew 2.0, we haven't had a chance for you to chime in on this one, so I'm curious, what are your thoughts, if you have any? And then B, what do you think our audience is voting for before I reveal the actual up-to-the-minute results, sir?
So I think I would say shorter term, I think VIX is probably higher from here. Longer term, I had mentioned that I think the big spike we saw was likely the top. One thing I'm seeing in the VIX right now, we're seeing what I call an ABC correction. So it's kind of just a zigzag pattern down to the 21-week simple moving average. So that's something I like to look at. As I think Mike mentioned, we're seeing the S&P come up to the 200-day moving average. We're filling this gap. We have that 3,000 level. So a pickup in volatility would not shock me as the market kind of digests this massive move we've had off the bottom.
Let's see if our audience agrees with you. They are feeling higher to the tune of not quite half, but pretty close to it, 46.2%. As of a few minutes ago, are feeling the upside north of 35, lower south of 25 is 20.2%, right around these levels. So in that 25 to 35 range, so kind of hanging out, can't really find its way in one direction or the other. That's actually number 2 with 26.9%. And you don't care. I'm hanging out in cash at about 6.7% right now. So a little bit higher than our other recent polls. Not quite as high as it was when we asked about a poll about back in late March, how many of you were in cash. So interesting stuff out here. Before we keep rolling, Mr. Andrew 2.0, sir, I'm sure a lot of your clients are hitting you guys up with interesting questions and comments and insights right now. What are you hearing from the TradeStation clients these days, sir?
So I had a client ask, how do you like to exit positions? So my belief is that the best way to exit a directional options position is to do it in pieces. For me, and it's going to differ for, depending on your style, but for me, I like to exit in quarters or thirds, depending on the time frame. And really the benefit of doing this is that it's going to eliminate those all or none decisions. I think the more you can get away from all or none decisions in trading, the better that's going to be for your emotions. You want to be as emotionless as possible. And another way to reduce those emotions when exiting or when deciding on an exit is to base your exit on a predetermined target. So you can use fib extensions, you can use a previous breakdown area, a gap, or a moving average, but you want to have a system in place as you're entering the trade. A lot of people have system in place to enter the trade, but not to exit. The exit is probably more important than the entry.
That is often the case. Folks can put on a good trade, getting out of it is where the rubber meets the road all too often. And being able to cut a loser is a very challenging thing psychologically. So a lot of people anyone could buy a stock, getting out of it. That's a more challenging prospect, let alone on the options side. So interesting stuff there. Let's see what our listeners have in store for us here. Michael Hendricks writing in saying, I am interested in learning options. I'm a beginner, he says. I'm a beginner, and I'm not sure where to start. I have done some studying. I've taken a few courses here and there, but they're very expensive. And I've learned that without some actual mentoring or guiding, I get lost really fast. I don't have, don't sell yourself short here, Michael. I don't have the brain power to figure some of the stuff out on my own. I don't have the finances to figure out on my own and lose a bunch of money. So I'm kind of looking for someone to walk with me as in turn and teach me the ropes. And I'm not sure if you do that kind of thing or not. I haven't lost any money in the stock market yet, but I want to learn. I'm eager to learn. If you want to call me, he puts his number and things. We're not going to call you, Michael, but we will discuss your question here today on the show. A lot of things you can do. You have a couple of questions. You want to learn. You want someone to help you out. And then also you want to maybe have a low-cost way of doing that as well. The latter portion, we could certainly help you out with things you can learn with on your own dime, like, of course, our Options Bootcamp show, which is back It's on every week now, so you can get a weekly dose of that. That's going back many, many episodes now as well. If you start at episode 1 of Options Bootcamp, again, it's on demand, so you can learn at your own dime and listen. Then if you have questions, hit us up. We're happy to answer them. That's a good way to at least arm yourself with some knowledge. You don't mention who your broker is, but obviously your broker, if they're worth their salt, should have some decent educational content for you there. So check out that because that's free. Optionseducation.org is the place to go. That's the Options Industry Council. They have a ton of free content there as well. So that's 3 places you can go to get a lot of free stuff. That satisfies the latter portion, the budgetary part of everything. Now, the first part, you want someone to mentor you. That's a little bit different. It's going to require a little bit of finances, but fortunately, I happen to know one such person who might be in the business of doing such things. Mr. Rock Lobster, what do you have to say here for Michael and anyone else out there who has a similar question, who's maybe intrigued, wants someone to hold their hands through this business a little bit, sir?
I guess the easiest thing I would tell people is, how much is learning something worthwhile? And, this year alone, I've probably watched people lose 20 or 30 million bucks. Not my students, just people that came to Option Pit. They weren't students of ours. They were already blown apart hugely. And, in their retirement, everything's gone because they didn't understand how things worked, or something just worked a certain way. And then all of a sudden it didn't work anymore. And they just what can we do? I go, well, I don't know. You don't have any money left in your account. I don't know what to tell you. So what I would say is, if you're gonna trade more than one lots, you should spend some money on learning how things work. If you're spending more, if you have an account size that's more than $50,000 or $100,000 and you're using portfolio margin in a reckless way, I'm just telling you now, it's only a matter of time before that's gone. So you can either learn how to manage risk properly or not, which is really part of half of what we do, besides teaching people how to structure things. It's how to manage risk and use their money efficiently. That's just practice and learning stuff. So, all I can say is, how big a check do you want to write? You can write us a reasonably sized check to learn how to do it and just use some of our off-the-shelf stuff, which you'll learn a lot. Or you're going to end up writing the market a much bigger check. I've been doing this for a very long time, and I haven't met anybody yet that learns the easy way. Almost everybody learns the hard way. So, you could learn from me. I've learned the hard way over the years, and I survived. And we can try to help you avoid it if possible. So you just have to decide, how much do you want to spend learning? The market is going to is going to charge you one way or the other, basically.
Benefit from our losses, listeners. Let us lose money so you don't have to. That should be your tagline there, Mr. Rock Lobster. We lose money so you don't have to. Mr. Uncle Mike, maybe this guy he doesn't want to do it himself at all. Maybe he's just like, hey, I want someone to walk me through this and maybe roll my puts for me, advise him on how to choose strikes and things like that. So what do you have to say to Mr. Hendricks and anyone else out there who has a similar question, sir?
Well, I think the first thing that you need to have an understanding of is, what's your overall financial picture? Meaning, if you just got a few $1,000s to your name and you want to trade with it, that's one thing. But let's say that you have a significant retirement nest egg saved up and you want to start trading with it. That's something different. A friend of mine lost his job actually right before the coronavirus happened. And so I feel bad for him and that he's having a hard time finding another job. But he has a fairly significant retirement nest egg saved up. I'm not his advisor, but he's just a friend of mine. But he was just asking, so I have this amount of money. Could I make a living trading off of this? I'm like, well, I think it's a little bit light for trying to make a living trading on it. Plus the fact that you've never traded in your life. And so, by the way, I did send him to you to the Option Pit, so he might be calling you guys. So who knows? But I think what's important is that you know what your sources of income are going to be. Because if you're counting on that short put expiring every week to be your weekly paycheck, it doesn't always work that way. And so I think what's really important is that you have a general financial plan first, then become educated on what to trade, what not to trade, how not to use portfolio margin recklessly. And then at that stage, you can get involved with it. Because ultimately, if you're the best trader in the world, but you don't understand tax efficiency, that's a major problem that's going to work against you. So I believe that writing a small check instead of a big check, as Andrew put it, is very intelligent. But I also would add, make sure that you have your overall financial plan in place first.
Yeah, I think this guy's he's reached a good point. He realizes he needs some help. He's selling himself short, though. I think he has the wherewithal to be able to make some judgments on this space. So first step, don't sell yourself short, Mr. Michael out there. Andrew, I mentioned brokers are a great starting point for everybody out there. What does TradeStation have if Mr. Hendricks is a TS client, or maybe he's interested in becoming one? What can he use to learn over there, sir?
Yeah, so what I would say is TradeStation, we offer all levels of education. So whether you're just kind of getting into the game or you've been there for years, we have all of that covered. So that's one thing to mention. I do agree with what everyone else said. You really have to have a passion for this because it's so tough you're facing some of the smartest people in the world. Anyone can learn, but it does take kind of that effort. I personally am not a big believer in like paper trading. I think kind of work up till you can have a small portfolio. There's nothing wrong with starting small, but you have to have that feeling of real money on the line. So if you're not willing to do that, I would probably have someone else run your money, but really you want to just find your niche. As I mentioned, we do have a full suite. Our affiliate, You Can Trade, it's a TradeStation affiliate. We do offer mentoring through that. So again, that's called You Can Trade, and that's a TradeStation affiliate. So if you are interested, you do have a passion for it, I would check some of that out.
That's true. Sarah has been on the show, so you can check out that You Can Trade there as well. So there you go. Michael and everyone else, a lot of different offerings out there, from the learn to do it yourself side to the have someone do it for you, or to the arm yourself with more information side. Lots to do. In the meantime, of course, you can always kick things off. Options Bootcamp, Options Playbook Radio. A lot of you guys have been mainlining those two shows in this quarantine period, so we're happy to keep them coming. I think maybe if you're listening live, we'll stream some of that fun stuff in between now and, of course, the big TWIFO 200. Let's wrap up here really quickly with one more. N3Cat. N3Cat wants to know, do we have another live stream option other than the one on Mixlr? They prefer Periscope or live stream. Finds them easy to use, and most live streams I follow use one of those. Yes, I agree. Most live streams do use those because those are video platforms. We specifically sought out an audio-only platform for a lot of the reasons I mentioned earlier, not the least of which being my fantastic Grizzly Adams quarantine beard, but also logistically, it's a lot easier on the audio side. We produce audio. That's what we do. A lot of you like the YouTube. When we put out the stuff for YouTube, it's a static image with the audio, but that still works on that front. Which people have asked us this a lot. You're not the only one, N3Cat. We're trying to figure out a compelling way to do something different. I mean, we could have done years ago the Imus in the morning thing, stick a webcam in the studio, you see what we're doing kind of thing. But we want to get something a little bit more engaging. Maybe it's showing screens of what we're talking about. Obviously, there's a lot of switching behind the scenes that goes along with that, and logistics and everything else. Do we have to want all the guests to have their webcams and their videos on? Logistically, that's a challenge as well. So that's why we haven't adopted that as of yet. But I am thinking about using those if we can find a way to put out our audio with a static image attached to it on the Periscope. That'd be a very easy thing for us to do. And then that would be a great way to use those platforms and just get more people out there. Because you're right, not everyone has Mixlr, not everyone's heard of it. We just like it because it's an audio-only streaming platform. But Periscope and others are ones a lot of people like. And we're trying to figure out ways to incorporate those as well. So N3Cat and everyone else who's asking those, stay tuned. We got some fun stuff in the works. We're kind of just kicking the tires behind the scenes first. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, here we go around the block. Let's see what we're watching for the rest of the week into the weekend. Let's go back around the horn. Let's start in the land of the Uncleist of Mikes. Mr. Uncle Mike, sir, what are you watching for the rest of this week into the weekend?
I want to keep an eye on the 3,000 mark with the S&P, watching that. Also watching just the news from a day-to-day basis. New things seem to pop up now like they were 2 months ago. The world seems to change every day now. Pritzker was not going to open the state. Now he's going to open the state. I know that's with Illinois anyway. But there's just so many things going on with the virus. So anything news, anything China, anything Trump, and then the 3,000 mark in the SPX.
There you go. And Mr. Rocklops, the same question for you, sir. What are you watching for the rest of this week, at least until we can all gather here together on VolViews tomorrow for VolViews 400? How crazy is that?
Oh, 400 shows. Who would have thunk it? Who would have thunk it? Yeah. Can we get above 3,000? I don't think so. But prior to the weekend, I thought, there was a lot of cooped up positive vaccine talk and things like that, but I don't see, I really don't see it happening. The China rhetoric is bad, all that kind of stuff. So I just think we're at a point now where the market has taken back much of what it lost, and maybe it's just tired. So I think it's tired at a high vol, and usually one of those things has to give. Either we move a little higher and people get used to it, or we don't, and vol goes back up again. So we're kind of stuck at one of those places where something's got to give. I just don't know which one it's going to be. So I would be surprised if I saw VIX go over 30 tomorrow, just based on the action that we have. Could, but we only got 0.5% today, so it's hard to generate higher vol with that number.
That it is. And last but not least, Mr. Andrew 2.0, sir, what are you keeping an eye on for the rest of this week into the weekend?
So, what we've seen so far really is clear evidence that this market is acting on liquidity, psychology, forward expectations rather than the current economic climate, in my view. I think, like your other guest said, Beijing threatening the U.S., that's something to watch because if you recall back to when we were having the trade dispute with China initially, or the negotiation, whatever you want to call it, we saw a ton of those tape bombs come into the market. A headline, a tweet comes out, market gets crushed. So if you have too much options exposure on during that, it could mean fast decay. At the same token, those tape bombs can also lead to trading opportunities if you're nimble. So for the time being, I think it pays to be a bit more nimble as we come up into potential resistance. Right now, the trend is still certainly higher. Breadth has been good, so no signs there of anything, no real signs of price reversals or anything like that so far. So just having an open mind at this point, as always, I think is the best course of action.
Open mind, always a key to success, not just in trading, just in life. Mind open to new possibilities. You never know. It's going to be cooking out there for you. I do know, though, what's coming up for you in a little bit, listeners. If you're listening live, you're going to get some fun stuff, maybe a boot camp, maybe an OPR, maybe both, who knows, in between. Then coming back in exactly half an hour, we got the old TWIFO 200 today, 400 tomorrow, 900 a week or two ago on this show. What the craziness. Records everywhere on the network. We've been cranking away for a while. Glad to see you guys are still loving it. Let's go back around the horn really quickly. Let's start in the land of Andrew 2.0. Sir, folks are intrigued. They want to learn more. They want to kick the tires at TradeStation for themselves. Where should they go? What should they do?
TradeStation.com/Options Insider. Again, TradeStation.com/Options Insider. We're offering cash rewards for signing up. And as I mentioned before, we have a full suite of education products. So please come check us out.
There you go. No matter what you're doing at TradeStation, begin your journey there at TradeStation.com/Options Insider. Then you can click out to the blog. You can click out to the education, all the other stuff you want. Just start there, and then they know you're coming from the show. Then you can click around and do all that fun stuff over there to keep Andrew 2.0 and all the others employed and happy over there in TradeStation land. And let's go to the Andrew 1.0, sir. Folks are intrigued. Maybe they're like, what was his name, Michael or others. They're looking for a little bit of mentoring. Where should they go? What should they do?
Surf on over to OptionPit.com. Probably try our Trading Legion. Figure it out. Get some mentoring. See how things work. Be able to talk to somebody that's trading every day and get your learning on.
I got to figure out what this Legion thing is one of these days. I know you've been talking about this Legion. I got to find out for myself. Maybe I should go to OptionPit.com. Then I, too, could learn more, join the Vol Trading Club, get the fancy hat, and figure out whatever this Legion thing is, and I could join that, too. OptionPit.com to learn more. And last but not least, I don't know if he's got a fancy Legion. But Mr. Uncle Mike, if I got questions like our listeners did, or maybe I want someone to help me and do some of this stuff for me in these crazy markets, where should I go? What should I do?
By all means, go to stcharleswealth.com or give me a call, 630-885-0017. If you are looking for a financial advisor that is looking for opportunities, not looking for places to hide when markets go down.
There you go. stcharleswealth.com is the place to go. And on behalf of the Unk list of Mikes and Andrew 2.0 and Andrew 1.0, a.k.a. the OG Rock Lobster, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep those coming. And we'll see you in a little bit for the TWIFO 200th episode spectacular. Then we're back again tomorrow for the VolViews 400th episode spectacular. I don't think we've ever had such epic milestones back-to-back before like this on the network. So it's going to be a fun time over the next 24 hours. Make sure you join us, listeners. And we're back again on Monday for more of The Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.